Thank you so much, Courtney, and good morning to everybody. Today we have Anthony Vossenberg with Thrivent online. He's going to go over some of the different long-term care options available through them as a carrier. So it's going to be pretty good stuff, especially with what's going on in a lot of the different states right now with long-term care taxes kind of coming into play. There's some great options that kind of help separate Thrivent from other carriers in the market. And with that, I want to say good morning, Anthony.
Good morning to you. Thank you very much.
Go ahead and let you take over.
Thank you very much. And Derek, I appreciate that. And to Mike and Courtney and to the team at AIM, you guys are wonderful partners. We thoroughly enjoy working with you and your advisors and welcome the opportunity to spend time with many of your important advisors this morning. By the way of background, I have been working for Thrivent for about 6 years. I've spent the last 4 decades in some element of the financial services arena, primarily in the life annuity and long-term care space. And I am responsible at Thrivent for the sale of disability income products as well as our long-term care solutions. Philosophically, we're very passionate around long-term care. We really believe that everybody deserves a plan. When I say everybody, frankly, for me, that means clients that are age 50 or older. I know some advisors believe that number might start in a client's 40s, maybe 45. But certainly, I think as we start getting a little bit closer to retirement years, there's a good case to make that no retirement plan is complete in the absence for a plan for long-term care. And quite often, a long-term care product is the right solution for funding the plan. So philosophically, we are very committed to comprehensive planning and believe that long-term care is a critical element to the vast majority of people's plans. And so I'm always happy to have a chance to talk with those who I'm sure today share a similar viewpoint as you work with your clients. So what I'd like to do today, frankly, is just give you a little bit more background on Thrivent. For some of you, you may know us. I think there may be folks on the call today that are not that familiar with Thrivent. That's okay. Give you just enough information, I think, that will help put things in perspective. And then I will get into our solutions. One thing unique about Thrivent, particularly when we're looking at our independent distribution, is that we are the only carrier in the market today that offers both a traditional solution and a linked benefit solution. And we believe, frankly, that no one product is designed for every situation, and having the benefit of being able to have alternative solutions, we believe, does a better job in meeting different client profiles. So I'll cover that to some extent, and if we have time, I'll share some of the unique elements of working with a Thrivent because of its member-owned company or member benefits, and give you a little bit more about that. So what I would encourage you to do as we go through the presentation, use the chat box if you want to ask questions. We'll save some time at the end. And I'll probably go through maybe 25 minutes of content. So with that said, here we go. All right, so Thrivent is a not-for-profit organization, which means that we have preferential tax treatment as a not-for-profit company. You may know that not-for-profit have to have a common bond in order to meet the tax code rules. And the common bond means that there's something that qualifies you as a company to not pay federal taxes. So if I were to give you 2 or 3 examples, I would point to a company like USAA, as we know, serves the military. They are a not-for-profit organization. If we were to look at AARP, they serve the seniors market. And they have, in this particular instance, a non-for-profit side, but they also have a for-profit business. With a company like Thrivent, our common bond is serving Christians. And I'll talk a little bit more about that as we move forward. We are a fraternal benefit company. There are some unique features about being a fraternal benefit company. One of which is that we are non-publicly traded. We believe that impacts our business decisions on a favorable basis because we're not working quarter to quarter. In fact, I would tell you that in our organization, it's not uncommon to hear our leaders talking about our business plans 10 years out, which is, in the world we live in today, almost unheard of. We do not make short-term decisions at a level that you would see with, for example, stock trading. We are really thinking about what I describe as the long game in the business decisions that we're making. We are a company that's been around for close to 120 years. It's our intention to be around for another 120 years, and that guides many of the decisions we make around the organization. We are member-owned. Those that buy insurance products from Thrivent, in fact, become owners of the company, and so that we think is really a cool benefit. And there are member benefits that go with being a member, which I alluded to. I'll get into a little bit later. We are the largest fraternal and financial services in North America. We are a company that has $162 billion in assets under management. We have over 2 million clients and surplus of over $16.6 billion, which I think is really an extraordinary number. Because as I often say to our distribution partners, is that we're not for profit that is very profitable, which seems maybe a little bit like an oxymoron. But we have an enormous sense of commitment to making sure that our company is flush with cash, because while we reserve to meet our claims paying abilities or capabilities or commitments, we still believe it's really important to be an organization that is very, very well capitalized, because much of the products and services that we offer to our clients have a long tail duration, and we feel very strongly about being very well prepared financially to be able to meet just about any kind of circumstance. So we're a well capitalized organization, and quite honestly, when it comes to long-term care, our senior leadership team has an appetite to sell more. We want to grow rapidly in the long-term care space, and we have capital to put towards reserving. I share that with you because we do not have a ceiling on how much long-term care are we willing to sell. I would say we can go to town and sell as much as we possibly can because of our highly capitalized organization. And I think for those of you who are really interested in growing your long-term care, we're happy to take whatever volumes you're able to generate and would like to place with us. We have been in the long-term care space now for about 36 years. So we have a book of about 100,000 clients. It's the book of about 100 million of recurring premium. We've been in the business of long-term care, as I said, for about 36 years, but that was before two companies merged. So for those of you that don't know this, Thrivent is the merger of two Fortune 500 companies, 8 associations of Lutheran Brotherhood and 8 association of Lutherans and Lutheran Brotherhood, who came together in 1987 and became Thrivent Financial in 2001. We changed our name in 2001. And while there had been products, LTC products sold by these two companies before the merger, from 2001 to 2012, we actually didn't sell our own product. We actually were marketing long-term care on behalf of two other major players, neither one of which is active in the market today. 2012, we re-entered the long-term care space. And I can tell you, we have to date been very pleased with our performance. We've been very pleased with the quality of our in-force block. We've only had one rate increase on anything sold within the Thrivent family. That was back in the year 2004. And we've never had a rate increase on a Thrivent branded contract. So we are very pleased and proud of our rate stability, which we actually believe is an advantage of our company. Albeit, I would say that any player in the long-term care space today probably has their product priced accordingly. I don't, for one, anticipate on sort of product sales going forward that we're going to see rate actions that we may have seen in the past, but that being said, we are very confident around our product pricing. All right, so let's talk a little bit about our Thrivent long-term care insurance. This is our traditional solution, and I'm going to just kind of walk you through the highlights. And if you have an interest in going deeper, pardon me, on any of these slides or topics, I'm happy to do so. So once again, I mentioned to you that we have two products. So this is going to be our traditional long-term care product. Later, I'll talk about our asset-based or linked benefit product, which is called Care Forward. Traditional product we will issue from ages 18 to 79. For those of you who are interested in this stat, our average age client is 57 years of age. 90% of our business is issued on a standard basis, sorry, I got that. Let me rephrase that statement, which is inaccurate. So we have 4 risk classifications: preferred, standard, class 1, and class 2. And what I meant to say is that standard, think about it, is that our standard pricing. Preferred is 90% of standard. Class 1 is 125% of our standard rate, standard pricing, and class 2 is 150% of standard. So 18 to 75, we have 4 rate or risk classes. We offer coverage between $1,500 a month and $15,000 a month. We refer to the benefit multiplier. So when you say, well, how much? It's $1,500 to $15,000. For how long? 2, 3, 4, 5, or 8 years. And I say that a little bit cautiously because we market a reimbursement product. So technically speaking, if my reimbursements equaled my monthly benefit, yeah, then these durations will line up. But I'd like to think about long-term care more as a pool of benefits, and depending on what's being reimbursed per month could have an impact on the actual duration. Elimination period, we offer a variety of elimination periods. Truly 90 days by far the most chosen option. We also offer a number of benefits. I believe that pricing of this product is highly competitive in the industry. We are competing predominantly against National Guardian Life and Mutual of Omaha, and certainly 2 companies that I believe are helping the industry grow. And Thrivent will compare very favorably with its traditional pricing. In 2 areas that I would point out, our competitive advantages would be the state of Florida and the state of California, where you'll see our pricing is very competitive. We're price competitive and we're benefit rich competitive. So what I'll do is just walk quickly through some of the options available to clients when you're doing plan design. So when I think about benefit rich, where I go to with that thought process is the ability to do design work, to have the ability to design a solution that is not the same for every client. So how does that work? Well, we can talk about our flexible increase benefit, and the way that particular benefit works is that we will increase the monthly benefit by 5%, and it compounds. It's increased every year, annually without evidence of insurability. The client has the right to decline the increase if they like. The key here is if they decline it 3 consecutive years, they would actually lose the benefit. So if you have clients that are, that are younger, and this is where I see this applying most, you have a client that's younger that says, listen, I know I'm going to have a bigger need for this tomorrow, but I want to capitalize on my insurability today and start small and build step by step and build a strong pool for 20, 30 years down the road. I think this is a very attractive option because it grows the policy or benefit pool every year. And I can't stress this enough, in the absence of being insurable. And I for one, don't take insurability lightly. Having lost my own insurability in my early 50s, I really harp on this point. You buy insurance with your wealth, but you also buy it with your health. So flexible benefit increase rider is very good for those who are starting small and building over a period of time. We have an inflation benefit, which can be either 1%, 2%, 3%, or 5%. Or frankly, if the client wants to not to have an inflation factor, to me, I don't see a lot of cases designed that way, unless we're talking about clients that are buying at an older age and frankly are very limited in how much they can pay in premium. And I understand that, but again, that's an option. Shared care. We have to me, a very good shared care option. One thing that I particularly like with our shared care feature, which is not necessarily available everywhere in the market, is best told through a story. If you have a couple who have shared care, and let's just pretend in this instance, let's just say one of the spouses goes on claim. What happens with their premium? Well, if they have waiver, they're not going to be paying premium while they're on claim. But in our particular offering, we actually waive the premium for the other spouse that is not on claim. So if one is on claim, we actually waive the premium on both contracts. I think that's a unique feature of our particular product. Waiver of elimination period for home care and adult care. Really what that says, you could have, you can eliminate the elimination period if you have home care. So that is a rider. I like that particular rider because most people today want home care over any sort of facility care. We also have a return of premium rider. For those of you who may not be clear on this, is not a return of premium in the sense of I want out of this contract and I'll get a certain amount of money back. We pay it as a death benefit as long as the policy has been in place for a period of 10 years. And then we also have a cash benefit rider. In the way that works is it's an additional benefit that pays a $5,000 lump sum upon claim and enhances the monthly benefit by $750 a month if care is at home, or $500 a month if care is in a facility. The last benefit I want to make reference to has to do with our survivorship benefit. And one of the things that I like about this benefit is if two spouses have coverage and one goes on claim and eats up all of their benefit and then eats up their spouse's benefit, that the surviving spouse can buy a long-term care policy as long as they do so before the age of 85. They do not have to be insurable. There's no evidence of insurability, but they buy it at their current age. So that's a great benefit. It's not used often, but it's a wonderful thing to know is in place. It's not terribly unusual for one spouse to eat all the benefits of both spouses' plans. We have an all pay and a lifetime pay. And for those of you who care to know this, we have a 5-year rate guarantee. All right, where does this product fit? Obviously, for couples, it's very attractive. For somebody, I think, you know, for as far as our pricing is concerned, we look good, really, for couples discounts. Our return of premium rider is very attractive from a pricing. 0-day elimination period. I would almost always put that on a contract due to the inexpensive nature of that rider. Younger couples, very price sensitive. And I would say, you know, when you're working with clients that are younger, like we don't see a lot of people buying long-term care when they're 25. We do see it occasionally when parents are very sensitive to the need for long-term care and they know they can get their children a plan and build it over a long period of time. It's a great planning strategy. Just don't see it very often. The one point that I put out to you here is when financial strength is important to your clients, and there are periods of time where flight to quality is really a big deal in the minds of the consumer. Know that with Thrivent, we have a 100 Comdex score. You're not going to, I don't think you can place business with a company that is more solid from a financial perspective. I would say on an underwriting perspective, our underwriting personally, I believe, is in line with the marketplace. I don't see us as more aggressive or more conservative than, for example, a Mutual of Omaha. I am told by a number of producers that when they look at our underwriting manual or guidelines, that they look similar to marketplace, but that our company has a tendency to be a little bit more flexible at looking at the whole person. My encouragement to you is advocate for your clients. If your clients have comorbidities, I would encourage you to write a cover letter and focus on what your clients are capable of doing and not so much on what they're incapable of doing. This probably goes without saying, but you know, when an underwriter is looking at a case, they have a tendency to look at what are the impairments that are going to get in the way of, daily activities. I really like to focus on making a case for those in terms of what they're able to do. So talk about how active they are, validate the things that they do in their day-to-day lives to show what they're able to do to help the underwriter better understand and balance, if you will, what they can't do versus what they can do. And I think you will be well served by doing so. I'm going to pause for a moment, and I'm going to turn my attention to our linked benefit product. We call this product Care Forward. We introduced it to the market about a year ago. As I mentioned earlier, the only company in the independent space that offers these two solutions. And the way that I think about plan design, I'm going to give you two ways to look at this. You will know that when you're selling linked benefit product, we often talk to clients about how will this plan or this product solution perform in the event of living, dying, or quitting. It's somewhat old language in the industry. I don't love it, but I do like the fact that this product appeals to a certain client profile that a traditional product doesn't. Traditional products, I believe, appeal to clients who are only concerned about buying a solution that solves for long-term care, and typically they can get more long-term care coverage for their premium dollar when they buy a traditional product. But it also comes with some degree of uncertainty around future rates. You heard me say earlier, we have a 5-year rate guarantee. You heard me say that we haven't had a rate increase on a Thrivent long-term care product. That is not to say that it couldn't happen. But in the world we live in today, there are clients who want guarantees. And this is what makes, in my view, a linked benefit product so appealing to the marketplace, is they know once they buy it, rates are locked. And so the Care Forward solution will provide an LTC benefit pool. It provides a death benefit, and there are cash values. Both of our products are reimbursement contracts. I think of the cash surrender value in these contracts as being more of an emergency fund than anything else. Very few people terminate these contracts. They are bought and they're kept. And the cash surrender value rarely ever comes into play. But nonetheless, if somebody decided that they no longer wanted the contract for whatever reason, our contract is built on a whole life chassis, and there will be cash value in the contract. So let me tell you more. Okay, so when we look at our particular policy, we'll issue from ages 18 to 75. That's a little more generous than much of the marketplace. Face amounts, 50,000 to 500,000. When we look at payout options or accelerator, we have the ability to do an acceleration, an accelerator of 3, 4, or 5%. The balance of the market is at 4 tops. Okay, so how does that work? So if you have a client that goes on claim, we know that we're going to draw benefits from the life insurance benefit first. I, for one, believe to draw down that benefit at a faster clip is generally the best thing for the client. They want to see the client get into the LTC benefit pool. In other words, they're using their own money first, and to get from their money into the LTC extension rider is generally a good thing. Now, let's be honest. We really wish people would be on claim for a short period of time for their own welfare. But if they're going to be on claim, and having the ability to draw down the death benefit at 3, 4, or 5% gives you more flexibility to design the right solution, whether you believe the right solution is short and fat or long and thin, right? Lots of benefit for a short period of time or less benefit for a long period of time. Our contract has a little bit more capability for a design perspective. On the inflation side of things, you can buy a 3% compounding factor for 20 years or 3 or 5% lifetime or none. We have flexibility around payment periods, single pay, 10 pay, 20 pay, and pay to 95. I will tell you that our most competitive plan design is going to be in the pay to 95. We have priced our product to be most attractive in a long pay scenario. That being said, we see a healthy amount of money on a single pay, partly because of 1035 exchanges, and partly because there are a lot of clients out there that are sitting on tons of cash. I know that to be true because in the interest rate environment that we've been living in for the better part of 10 years today, we've seen Americans sit on inordinate amounts of cash because they look at it from the vantage point and say, I'm comfortable having the liquidity, knowing that if I have it in a CD or some sort of short-term investment, the interest rates have been so historically low that people have chosen liquidity over 1%, 2%, 3% investment choices. That's good news, and it's good news for us today, particularly because the interest rates are higher. People are starting to move their money off the sidelines into products like multi-year guaranteed annuities and a whole host of other products. My point is, for your clients that are sitting on cash, who want to leverage their dollars, this type of plan design that we know is asset-based long-term care provides them with an incredible opportunity to leverage $1 to turn it into a multiple of dollars through death benefit and long-term care pool. I don't think there's been a better time to be talking to our clients about extended care planning. All right, Care Forward offers a couples discount. Not unlike our traditional product. Our traditional product, if two couples apply for coverage and they're both insurable, we have a 20% discount. If a couple applied for 2 traditional policies and one was declined, the person insured or insurable would get a 5% discount, right? So it's 20% or it's 5%. When you look at our Care Forward product, we actually have built the discounting into the rates. So the only way for you to calculate, well, what is the actual discount, would be to run the numbers as singles and see the difference in premium. But I would argue it's built into the pricing, and it's generally going to get you in the sort of 10, I would say 10, 12, maybe 14% range for discounts. Also keep in mind that, you can have a client, we see this a lot, one spouse will buy a traditional product and one spouse will buy a asset-based or a linked benefit product. And in that situation, the 20% discount would apply to the person buying traditional. So that's just a pretty cool little nuance to be aware of. What we really like about this product per se is that the flexibility in design. One of the things that we did when we created this product is that we put more focus on the long-term care benefit pool. Another way of saying that is we believe this product is bought for long-term care solutions. And so we're going to be typically a little lighter on the death benefit and maybe a little lighter on the cash value in order to create a healthy, robust long-term care benefit pool. So that's what you will see when you start designing this solution. I would really encourage you to look at this, particularly for clients that are between, I would say, 45 and 60. Very attractive. Okay, I'm going to cover one more topic and then I'm going to open it up for Q&A. I mentioned earlier that we are a membership organization and our members receive member benefits. And you might say, well, what are those member benefits? Well, I won't go through it in detail, but let me give you the highlights. So first and foremost, you should know this about Thrivent. If you recommend Thrivent to a client and they're insured and they get a policy, 30 days after receiving that policy, we're going to mail them a membership kit. And in the kit, it will describe what they are entitled to as members. I often refer to this as the ABC. So if you guys have access to a pen, write this down, ABC. The A stands for action teams. Thrivent historically has been the largest supporter of Habitat for Humanity in I think North America. We do a number of charitable events locally. Most of it has been in the U.S. in the last 3-4 years, and I would say a lot of it has been around hurricane relief. We provide opportunities for our members to participate in such types of events. And we have, on many occasions, have had opportunities for our members to travel abroad to be part of a Habitat event, which has been subsidized by the company. Not paid for by the company, but subsidized by the company. For many of our clients, they have said it's been sort of a life-changing experience, but that's part of our philosophy, being a not-for-profit, is giving back to our communities. So action teams. The other element of action teams, and I've kind of weaved the B, which is build, which has a lot to do with relief programs and Habitat for Humanity. The other simple example of an action team is if you're a member, you are eligible to come to Thrivent twice a year and propose something that you would like to do on a charitable basis in your community. So I'm going to give you a simple example of one thing that I do, but there's thousands of stories. I live in a neighborhood that every Thanksgiving has a turkey trot, and probably 100 neighbors come out and they make it fun. There's music and coffee and donuts and all that kind of stuff. But before it all gets started, they have a kids event. And there's probably 30 or so little wee children running around it's a blast. I sponsored that on behalf of Thrivent. I go to Thrivent and I tell them this is what I'd like to do. They write me a check for $250, supply me with 25 to 30 t-shirts that I fit all of these little runners, and they give me signage that I can set up essentially as if I was at a trade show. I could come up with 1,000 different stories, but that's one that I do. I do locally in my neighborhood. It gives Thrivent a little bit of recognition, and I have fun doing something for my community, and it's paid for by Thrivent. And I walk through my neighborhood now, and it's not unusual for me to see a 6-year-old wearing a Thrivent t-shirt. So that's action teams, and you can dream of just about anything that's on a charitable level. That's available twice a year, every year, to our members if they want to take advantage of it. The C stands for choice dollars. So we have a notional bank account. So we have a formula. I won't explain it to you today, but if you pay insurance premiums with Thrivent, you get credit into a notional bank account. And twice a year, you can say to Thrivent, hey, I have X dollars in this bank account. I can't cash it out, but I can tell Thrivent to donate that money to any one of 30,000 charities. So our clients get basically donation points that they can tell us where they want to direct money. That's a member benefit. And then the last one I'll describe is the newest one. It's called Dari by Home Thrive, and it ties into what we're talking about here today, long-term care. We have, in my view, the most robust caregiver service in the industry. This is available not only to people who buy long-term care, it's available to anybody that's a member. In fact, you don't need to own long-term care with our company to access this service. So we have an online service that is supported by, I think, a team of about 25 caregivers that you can literally pick up the phone and talk to about anything related to caregiving. We've designed this specifically for caregivers. And I'll give you one example, and then I'll pause and let you ask questions. How I personally use this service. I grew up in Toronto. My parents live in Toronto with my sister and my brother. I live in Richmond, Virginia. My sister is my parents' caregivers. They're nearly 90 years of age. And everything you've been told about caregivers, I've watched unfold with my sister. And my father went into a hospital. We didn't think he was going to make it. He did come out, but he no longer has the ability to walk. So we needed to make significant decisions, which included keeping Dad at home, but we had to make a ton of modifications to the house. My sister was pretty freaked out, pretty stressed out, and just didn't almost know what to do. I called Dari by Home Thrive, explained the situation to them. They literally, within an hour, put together a help kit for my sister to figure out what questions to ask the social worker in the hospital around my father's plan for care. They helped to figure out what modifications that she would need to make and organize for the house and how to go about doing it, and all kinds of things. Did it solve my father's problem? Well, what I would say to you is it minimized the stress my family was going through at a time where they needed some help. That I can't tell you how valuable that service was. It's a member benefit at Thrivent. So I've shared with you that we have two products. We have an exceptionally competitive traditional product. There are very good products in the industry or in the market for linked benefits. We have one. There are other very good products. When you need a company that has the strength of a Thrivent, and you're working with somebody who needs your help in guiding them through long-term care, my ask of you is please give us consideration for your business. Thank you very much for your time. Derek, I'm happy to take any questions.
Yeah, perfect. So one that I know I got all the time working as an agent, and that a lot of our agents ask me now is going to be centered around kind of that statement of Christian common bond. A lot of
Yes.
people think, oh, I don't go to church every Sunday or this. Do you want to kind of touch
Yes.
on that a little bit?
Yeah, I'd be happy to. And it does come up a lot. So here are the two questions that I often get. The number one is, do I have to be Christian to sell a Thrivent product? Answer is no. I will tell you that there are 4 states that require you to have a fraternal license in order to represent a fraternal. There's 5 states. And all that really means is that there's no license, there's no exam, but you actually have to pay a small fee and add it to your license. But the more important question is, do my clients have to attest that they're Christian? The answer is yes, if we're talking about an insurance product. If a client is buying a Thrivent mutual fund, the answer is no. But an insurance product requires the client to sign, I like to describe it this way, that they, by their own definition of Christianity, consider themselves to be a Christian. Now, that says to you that if they're atheist, or I would say Muslim, or Jewish, it is very unlikely that you are going to recommend our product or be able to sell our product. It's really the client's obligation to make that decision. What I would tell you is about 70% of the market considers themselves to be Christian. Many advisors do not discuss faith and finances in the same discussion. I understand that. And how I work with clients, if I do not know what their religious orientation is, I'll often ask a question along the lines of, once we've determined that they identify a problem, see a need, and I'm going to work towards providing them with solutions, and I'm about to go into the design phase of the sales process, I will often say to them, Mr. or Mrs. Prospect, fortunately, I have access to the best insurance providers for long-term care insurance. And as I look at those carriers, one that I have access to is a very fine company that is a not-for-profit fraternal company that serves Christians. Should I consider them when I'm looking at various options for you? And that will give you the answer you are looking for. I would also tell you this is not something you're going to hear often from somebody at Thrivent, but I would look at the world this way. I think 20% of the marketplace will buy Thrivent just because of our mission and values. That 20% of the Christian marketplace wants to do business with firms that they feel an affinity to. That in the absence of pricing, they want to work with Thrivent because of that affinity. That's 20% of the market. I think 20% of the market won't do business because we're a firm that focuses on the Christian community. And the 60% in between couldn't care less. What they care about is, I'm working with a good advisor who's making good recommendations, providing me with good advice, and the product solutions are with good, sound companies. And so I speak very openly and candidly about that. We're not for everybody, but we're for the vast majority of the market. And I think our products will stand on their own. But the Christian component is a deal breaker for some of your clients. And so if you don't know their religious orientation, don't find out when you're taking the application. The last place you want to be to find out that your client is is Jewish in faith, and you can offer our product to them.
Yeah, perfect. Thank you for answering that, because I know a lot of agents who aren't as familiar kind of have that question in their heads. So that definitely kind of helps open it up a bit. For now, that's pretty much all the questions we have. There's some more kind of smaller specific ones that I'll reach out to some of the agents and answer. But I'd like to thank you.
No, you're welcome. Thank you.
Yeah, perfect. Thank you so much for taking the time to be here, and we'll reach out to you guys after. I'm going to go ahead and kind of wrap this up. If you guys do have any more questions you think of after, feel free to ask me. Like I said, I will be reaching out. But I want to say thank you again for Courtney for the intro, and for Anthony for being here and giving this great presentation and covering a lot of those key differences that really kind of help Thrivent stand out in the marketplace. It was great to have you here.
Thank you. You guys have a great day, and just thank you for your business, and thank you for your consideration. Love to work with you, but most importantly, stay healthy and continue to do the good work you do. Have a wonderful day.